Hello and welcome everyone to the Commodity Report for the 5th of August 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So this week we have seen gold prices break back out to 2-month highs. Platinum prices, they're up 5% over this week, 9% for the month. Last week, of course, we had silver prices gaining 9% to the upside here. And as a result of the Bank of England's interest rate decision to increase rates by 50 basis points, gold broke out another 300 points to the upside. So essentially in the last 2 weeks, gold prices, they're up over $100 or over a 1,000-point move to the upside. Everything that we've been discussing with you for gold has played out. In fact, the range is even on this week where gold, prior to the Bank of England interest rate decision, dipped back down towards that 1760, 1755 zone and then had another breakout over a 300-point move back towards the 1794 level. Was exactly what we detailed out to you for this week to look at opportunities and range-bound price action back down towards 1755, 1760, and then a breakout back towards 1800. So here is that report where we talked you through that expectation for gold and also the Bank of England rate decision for this week. And this week on Thursday, we now have the Bank of England, which are anticipated to increase rates by 50 basis points. As we talked you through last week, we've scaled into a number of positions on gold, on copper, on silver, and platinum. In fact, we've got 4 positions at the moment on copper and 4 positions at the moment on gold. Over the course of this week, the range I'm looking at for gold is the 1750s up towards the 1800s. But just bear in mind, our positions are much lower on gold. Our main job right now is to scale out of more profits, particularly later in the week and also on Friday with non-farm payroll. If we do see that as a major catalyst for a bigger move higher back towards the 1800s, our main job is to scale out of more profits. So again, we've seen the same playbook play out yet again here. So we've had the European Central Bank announcement. They increased rates by 50 basis points. Gold broke out over 500 points within 2 days. Last week, we had the FOMC statement where the Federal Reserve went ahead with a 75 basis point increase in rates. And with that, we saw gold yet again break out over 500 points to the upside. And now this week, we have seen the Bank of England, they've increased rates again by 50 basis points. Gold breaking out over 300 points back up towards the 1800 level. So are you seeing a very similar pattern here at the moment? What we're seeing is risk off. Capital is coming out of the market as traders get nervous in the lead up to a central bank rate hike. And then as soon as the rate hike has occurred, we see that breakout higher for the metals. Gold catches the safe haven bid and we see a breakout back towards multi-month highs, which we're seeing at the moment for gold. Now, of course, platinum is catching up, breaking out to 2-month highs. We mentioned to it previously on a commodity report with you that commercials had flipped into net long on both platinum and also silver over the last month. And as a result, this could create a massive breakout move to the upside off the recent lower channels that were retested in the month of July. So we've seen capitulations to the upside over the last couple of weeks here across the precious metals. Last week, of course, copper prices, they broke out over 8% to the upside. Now this week, we've had the OPEC meeting impacting oil. And of course, we've had Nancy Pelosi's visit to Taiwan, increasing geopolitical risk, where we saw the dollar break out at the beginning of the week. Oil prices, they rolled over, breaking below $90 per barrel, currently sitting around 88 to 89 US dollars per barrel. However, we have another major news item at the end of this week, which is non-farm payroll data. This again could be a massive catalyst for volatility in the market. It's the name of the game right now. Make sure that when you get these slingshot moves higher, where you are seeing very quick impulse moves like we've seen for the metals over the last week, that you take the opportunity to bank into strength, lock in some of those profits, because if you then see another big sell-off like we've seen on oil, for example, dropping back below $90 a barrel, it allows you to get in at much lower prices. When you see sudden volatility on the metals where they drop back down towards their swing lows, again, huge opportunities over the last month to scale into copper, palladium, platinum, gold, silver at the lower end of their channels before they've had between 5 to 9% moves to the upside over the last couple of weeks. Again, this comes down to utilizing market intelligence, data, statistics, understanding the narratives in the market as well, what sort of impact that will have, and getting prepared for that in advance, a few chess moves ahead of that particular news item that has occurred. I've talked you through that over the European Central Bank announcement, over the FOMC statement, and now the Bank of England as well, how to position ahead of that with the expectation you would see outflows in commodities in the lead up to that, and then a breakout afterwards, just like we've seen with gold, breaking back out to 1,800 US dollars per ounce. So again, I hope that many of you have been able to capitalize on the volatility over the course of this week. We do have non-farm payroll on Friday. That can be a big catalyst for major moves in the market. Another point to bear in mind on non-farm payroll is sometimes you can get a delayed reaction later in the day. So look out for that. Obviously, I'm expecting volatility off the non-farm payroll, but often you can see a delayed reaction later in the day, which follows through to the early part of next week. So I'll put that on your radar. We'll go through that in more detail on the week ahead commodity report as well. If you've not been making money in commodities over the last couple of weeks, I would be incredibly surprised. There's been such straightforward opportunities that we've detailed out for you step by step in these markets. So again, you want to make sure that you're utilizing the right approach to the market, not outdated technical analysis strategies or gimmicky indicators that just do not work in 2022. They either keep you out of the market or you end up getting chopped up all of the time. You get your delayed confirmation if you've been ending up buying much higher with the recent breakouts that we've had in metals. That's not optimal for you at all. You want to get in nice and early, get in just before the move is about to occur, capitalize on those impulse moves and be banking into strength when everyone else is FOMOing in. This is the optimal way for you to approach these markets. So with that, if you would like to learn the research-driven approach to the market, you'll be utilizing data, market intelligence, statistics, learning the daily, the weekly, the monthly, the quarterly cycles for each commodity, learning the intermarket correlations, the ratios in the market, the capital flows, the key areas of liquidity, and of course learning how the hedge funds, money managers, banks and institutions are positioned in the market, and alongside that learning the narratives, the macroeconomics, the fundamentals and the geopolitical risk. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.